Welcome to the deep dive. Today, we're really digging into something pretty significant happening in crypto right now. It's a major institutional shift, the launch of Evernorth.
Yeah, so our mission here is to take this news, all the details we've gathered, and really unpack what it means. We're talking about a new digital asset treasury vehicle backed by Ripple, backed by some big names in crypto, and they're planning a SPAC merger, the AIM, raise over $1 billion. That billion is mostly earmarked to build essentially the largest publicly traded treasury of XRP. We're expecting it to trade under the ticker XRPN.
Exactly. And it's crucial to see this isn't just, another way to hold tokens. It's more fundamental. This is shaping up to be an architectural change. Think of it as a strategic move to build these asset holding companies around specific tokens. It signals serious institutionalization, on the public markets. And it could really change the competitive landscape for different token ecosystems. It raises the stakes. Okay, let's jump right into the mechanics then. $1 billion. That's a serious chunk of change, especially in this context. So once the SPAC merger with Armada Acquisition Corp. 2 goes through, hopefully what is Evernorth actually planning to do with all that capital?
Right, so the primary goal, as you said, is building that core treasury. That means buying XRP on the open market, lots of it, aiming for that $1 billion mark, maybe more. But, and this is the really key distinction from something like a Bitcoin trust or an ETF, this treasury isn't designed to be passive. It's not just sit and hold. No, the sources we're looking at suggest the funds will be actively deployed. We're talking institutional lending strategies, using it for liquidity provision. And this is really interesting, getting involved in various structured DeFi yield strategies.
Okay. So it's not just HO dealing, as they say. It's active management. Treating XRP less like just digital gold and more like an income-generating reserve asset. That multi-pronged approach, holding and deploying, that feels like a real structural shift here.
It absolutely is, because it formalizes a totally new way for institutions to think about owning tokens. Traditional finance, they love yield, right? Predictable returns. And this vehicle seems designed precisely to appeal to those traditional investors. People comfortable with public companies, with clear revenue strategies, even if the underlying asset, XRP, is volatile.
Makes sense. Now let's talk about the listing mechanism for a second. Why go the SPAC route? Merging with Armada Acquisition Corp. 2, why not a traditional IPO? Or just, a private trust like we see with Bitcoin or Ethereum products?
Yeah, that choice tells us quite a bit. It speaks to urgency, I think, and maybe the current regulatory climate. A traditional IPO, it's slow, it's expensive, and there's intense scrutiny about the asset before you can even list. Is it a security? Is it a commodity? All that. A SPAC merger, while it has its own complexities, offers a potentially faster path to being publicly traded. Essentially, Evernorth gets to merge into an existing public company, Shell Armada, which already has that structure, the listing compliance kind of figured out.
Right, speed to market.
Exactly. Speed is critical in crypto. They likely want to get this institutional exposure vehicle out there now, maybe beat competitors, maybe capitalize on the current, let's say, ambiguity around token classification by wrapping it in a familiar corporate structure right away.
That clicks. It's like using the existing rails of the capital markets to quickly build a framework around a digital asset. Okay, so let's pivot to the strategic angle for XRP itself. Ripple has always positioned it for payments, for settlement. How does this big treasury play potentially shift that story?
This is where you start hearing that term digital reserve asset being floated around. Think about it. Positioning XRP as the core holding of a publicly listed billion-dollar entity backed by major players. You mentioned Pantera, Kraken, GSR, SPI.
Even contributing $200 million collectively already.
Right. That assembly itself is a massive signal. It suggests XRP is seen, at least by these backers, as stable enough, established enough to be a primary treasury asset for a public company.
Okay, hold on. Let me push back on that a bit. You just said they plan to deploy this reserve asset into lending and, importantly, into DeFi yield strategies. Isn't that a contradiction? A reserve asset usually implies safety, stability, liquidity. Chasing yield in DeFi, which we know can be volatile, sometimes opaque, doesn't that kind of undermine the reserve status they're trying to build?
That is the essential question here. It's the paradox at the heart of this, and it's exactly what the market and investors need to scrutinize. They're juggling two objectives, right? One, create this stable, centralized, institutional-friendly holding company. Two, generate yield, potentially higher returns, to satisfy public shareholders who expect performance. Success really hinges on how sophisticated their risk management is. If Evernorth mainly sticks to, say, established over-collateralized institutional lending desks, the risk might be more contained. But if they start chasing higher yields and more exotic, maybe newer, less audited DeFi protocols, then yeah, they expose this public vehicle XRPN to significant smart contract risk, protocol risk, liquidity risks, black swan events, basically.
So that institutional scaffolding you mentioned, Pantera, Kraken, GSR, SBI, that backing isn't just about the money then, it's about credibility.
Absolutely. It's credibility and potentially the infrastructure, the connections, the know-how. It helps shift the perception from, you know, that crypto token XRP towards regulated capital markets grade exposure to XRP.
Yeah.
And for Ripple, well, this seems like a clear strategic win. It boosts the whole XRP ecosystem, obviously drives demand for the token. And by locking up potentially $1 billion worth of XRP in this public treasury, it could significantly reduce the free float, the amount readily available for trading. Plus, it offers this clean, potentially regulated on-ramp for big traditional money that might still be hesitant about dealing with crypto exchanges and wallets directly.
Okay, so we've outlined the structure, the what and the why. Now let's bring this home for our listeners. Why should this Evernorth news matter to you listening right now? Whether you hold XRP or not, whether you're an investor, a trader, or just someone interested in where this whole space is going.
Great question. For the, let's say, long-term investor, Evernorth represents a fundamentally different way to get exposure. Instead of managing private keys, dealing with different exchanges, worrying about self-custody, you could potentially just buy shares in XRPN through your regular brokerage account, like buying any other stock. For some institutions, maybe even some retail folks, that regulated wrapper, that familiar equity structure, that could feel like a much, much lower barrier to entry than buying the token itself.
And what about the active traders, the ones watching charts, order books, token velocity?
For them, the key dynamic is supply absorption. Plain and simple. When an entity publicly states its intention to raise $1 billion specifically to buy an asset on the open market, that's a massive potential vacuum cleaner for the available supply. This reduction in the free float, the tokens easily traded day to day, means that any future positive news, any catalyst, could potentially have a much bigger, faster impact on the price. There's just less supply readily available to meet new demand. So traders need to watch. How quickly does Evernorth actually raise the money? How fast do they buy the XRP? And at what price levels does that buying happen? It fundamentally alters the supply-demand equation.
Okay, and this is where I think it gets really interesting for the whole industry, right? The ecosystem impact. If Evernorth pulls this off, if it works, does this become the new playbook, the new standard for major tokens?
It very well could. If this model, the publicly listed token treasury company, proves viable, meaning it successfully closes the SPAC deal, navigates the market volatility, actually generates decent yield without blowing up, then yeah, you can bet others will try to copy it. We could see major layer 1 ecosystems, think Solana, Avalanche, maybe others looking to set up similar structures. Why? To institutionalize demand for their native token, to frame their token as a reserve asset. The nature of competition might shift. It wouldn't just be about who has the fastest blockchain or the coolest apps. It might also become about which ecosystem can build the most robust, credible, capital markets-ready vehicle to hold and manage its token. It's almost like institutional token warfare in a way.
Wow, okay. Institutional token warfare, that's a powerful idea. But it also sounds incredibly complex and risky. I mean, $1 billion public company via SPAC, holding a volatile crypto asset, deploying into DeFi, it just screams risk from multiple angles. So let's connect this to the bigger picture. What are the inherent risks we absolutely need to keep an eye on? And what metrics should we be tracking?
Okay, risk number one is just basic procedural stuff. Execution risk. Getting that SPAC merger closed isn't a given. It involved complex due diligence, shareholder votes, regulatory approvals. The timeline they're talking about is Q1 2026. That's a ways off. Any major hiccup, any significant delay, or if the deal just fails, that could crater sentiment, not just for XRP, but for this whole token treasury concept.
Right. And assuming it gets operational, what about the risk of holding so much XRP?
That's the concentration risk, exactly. The company's value becomes heavily tied to XRP's price swings. And then there's the regulatory overhang. The legal status of XRP, especially in the U.S., is still, shall we say, evolving. An adverse ruling could dramatically impact the Treasury's value overnight. But maybe the biggest operational risk, going back to our earlier point, is that deployment risk. Especially with DeFi. How do you transparently explain the risks of complex DeFi yield strategies to public market shareholders? How do you audit it? How do you disclose the counterparty risks, the smart contract risks? That's a huge challenge for a public company.
Okay, so looking forward, say over the next year or two, what specific things should listeners be watching to gauge if this is succeeding or stumbling?
Well, near term, it's all about those milestones.
Right.
Watch this SPAC process closely, approvals, votes, final closing date. That's critical. Once it's potentially operational, then the key metrics become: how much XRP are they actually acquiring? At what average price? How quickly are they hitting their targets? That tells you about market impact. But the long-term metric, the one that will really determine its success and valuation, it's transparency.
Transparency in what way?
In their governance structure,
Yeah.
in their risk management framework, and crucially, in their deployment strategies. Will Evernorth actually publish details? Like which specific DeFi protocols are they using? What are the LTV ratios on their loans? What are their risk mitigation steps? If they're open and clear, they might earn trust and a premium valuation. If they're opaque, the market will likely price in a significant discount for those unknown risks.
And you can't ignore the broader regulatory context here. A U.S.-listed public company buying crypto and actively using it in DeFi, that's basically painting a target on its back for regulators, isn't it?
It absolutely is. It forces the issue. It will likely accelerate regulatory discussions, maybe even specific rules or guidance around these kinds of entities. How are these tokens reported on balance sheets? How is the yield accounted for? What disclosures are required? All of that regulatory attention creates its own layer of risk and uncertainty that needs to be factored in.
Okay, let's try to bring this all together then. What does this Evernorth development mean for different types of people in the space? Say, if I'm a long-term XRP holder versus someone managing a diverse crypto portfolio, how should I think about this?
Yeah, good question. For someone holding XRP long-term, this is potentially a very bullish structural development if it executes well. It adds a huge new source of demand and institutional validation, but you have to constantly weigh that against the execution risk. The SPAC needs to close. The strategy needs to work. It's not a sure thing. For a portfolio strategist, it introduces a really interesting choice. Before, it was maybe XRP versus Bitcoin versus Ether versus cash. Now, specifically for XRP exposure, you have a choice. Do you hold the token directly with its volatility and self-custody needs, or do you hold XRPN, the public company, with its corporate structure, management risk, but potentially easier access? They offer a similar underlying exposure, but different risk profiles.
And a key caution here, because we've seen other types of crypto-related companies, maybe Treasury plays, come to market with a lot of hype and then not quite deliver.
The caution is straightforward. Don't confuse the announcement hype with actual performance. Wait and see. Does Evernorth actually manage the risk well? Do they generate attractive, sustainable yield after fees and operational costs? Are their disclosures truly transparent? Premium valuations should only come after they demonstrate consistent, well-managed performance and governance. Watch what they do after listing, not just what they say before listing.
It's undeniable, though. The Evernorth launch feels like a significant moment. It really signals that major tokens are pushing hard into that capital markets grade asset category with all the complexity and scrutiny that comes with it.
It does. It feels like a maturation step, perhaps. But whether this specific model becomes the template, that really depends on Evernorth's execution, on regulatory clarity, and on how the market ultimately adopts it. We absolutely need to keep a close eye on these institutional infrastructure plays. They often lead the way, showing where the next phase of the market cycle might be heading.
Definitely. And hey, before we wrap with our final thought, we just wanted to say a quick thank you to all of you listening. Seriously, when you take a moment to like, subscribe, maybe drop a comment, it genuinely helps us out. It boosts visibility, helps the algorithm find other people interested in this stuff, and honestly, it lets us keep making these deep dives. So yeah, we really appreciate that support. It makes a difference.
It really does. Okay, so here's something to chew on as we finish up. We're seeing this merging world, Web3 finance, tokens, traditional treasuries, public companies, institutions. It's all blending together. If you really want an edge, if you want to understand where the next big shift might come from, maybe stop asking just which token is next and start asking, how is the fundamental architecture of token ownership changing? But that seems to be where the real action is right now.